the midweek edition of Business Morning, live on Channels Television. Good morning, good evening, wherever in the world you're watching from. I'm Ladi Williams. Great to have you join us. First off, let's take a look at what's happening in the oil markets. We see oil prices rose in early Asian trade. Today, as industry data showed a larger than expected drawdown in U.S. crude stockpiles. U.S. West Texas Intermediate crude rose 67 cents to $95.65 a barrel in early trade. Brent crude futures rose about 33 cents to $104.73 a barrel. After settlement on Tuesday, industry group, the American Petroleum Institute, said crude stocks in the United States fell by 4 million barrels last week, just 4 times the 1 million barrel decline expected by analysts in the Reuters poll. Gasoline inventories fell by 1.1 million barrels compared to expectations of a build of 3.5 million barrels. That was according to the API data. The International Monetary Fund has cut its global growth forecast for 2022 and 2023, tagging the world's economic outlook as gloomy and more uncertain. Its World Economic Outlook for this month, the International Finance Institution says it's now expects the global economy to grow by 3.2% this year before slowing further to a 2.9% GDP rate next year. Latest revisions, which comes amid higher than expected inflation around the world and slow recovery from COVID-19 pandemic, marks a 0.4 and 0.7 percentage points downgrade from its April projections. Meanwhile, the IMF has retained Nigeria's economic growth forecast for this year at 3.4%, which remains positive due to rising oil prices. And the president of the Africa Development Bank Group, Dr. Akinwumi Adesina, has given strong assurance to U.S. investors that Africa is a secure, competitive, and profitable market for investment. Speaking at the U.S.-Africa Business Summit in Morocco, Dr. Adesina wants American investors to see Africa as a logical investment destination and to engage with the continent in a win-win partnership. The AFDB boss observes that despite the disruptions of the COVID-19 pandemic and its impact on economies, the numbers of private equity deals in Africa increased from 230 in 2019 to 255 by 2020, stressing that even in turbulent times, opportunities still abound in Africa. Take a listen.
The African Development Bank is mobilizing $20 billion for developing the desert of power in the Sahel, which will power the economies of 11 countries with solar and become the world's largest solar zone. From DRC, Morocco, Namibia, and Botswana, huge opportunities exist for green hydrogen, the fuel for the future. Africa, ladies and gentlemen, therefore offers a very profitable investment destination. Savvy investors know if you're not invested in Africa, you are really missing out on the world's leading investment opportunities frontier. And investors are paying attention, a lot of attention to Africa. The number of private equity funds in Africa grew from only 12 in 1997 to 150 by 2020. I am very positive about Africa's investment opportunities, and so should you. I really believe that this is the time for U.S. investors to rapidly move and invest massively in Africa. There's always a first mover advantage, and opportunities wait for no one.
And now to our first conversation. We're looking at Nigeria's mining sector. Well, despite the huge gold potential, Nigeria is not yet competing favorably with other markets for investment flows as illegal mining and other issues plague the mining sector. Let's discuss this and other matters now with Nere Terba, MD Kian Smith, the refinery. Join us right here in the studio. Great to have you.
Thank you. Good morning.
Good morning. So we're talking gold today, and yes. Well, we see most countries, enjoying, from their gold reserves, at this point. But we're seeing Nigeria not really tapping, that potential. How are you seeing that sector?
Well, I think that was the case several years ago.
Right.
We're getting there, but a lot has happened in the Nigerian gold mining sector. We have Segulola Gold Mines. It's listed in Toronto and London Stock Exchange. They've been producing since November, doing very well, refining outside the country. And now, even for us, Kean Smith, we have been producing gold in a small scale, aggregating with the artisanal miners. We started refining in small capacity in the last 2 years. We even have a product here, a coin that we refine. We've been producing this for about 2 years.
And this is 1 ounce?
This is 1 ounce. Festus Okotie-Eboh, the first finance minister of Nigeria, the one who established the Nigerian Mint.
Right.
And now, we've even gone further on this value chain for the country, that we are taking Nigerian gold, swapping it for LBMA gold products like this, and now making it available in the market for sale, doing this in custodianship with Union Bank. So I think the narrative has changed, that now Nigeria is seeing the benefits.
So now we're stepping up.
Exactly, seeing the benefits, yes.
Okay, so, talking about these gold coins, now we see, most countries like Zimbabwe, they've been battling with, FX issues for now, and now they've, launched their own gold coins.
Yes,
and,
on Monday.
Yeah, on Monday. So how is this going to help us here in Nigeria?
So, what gold helps you really do, it helps you protect from inflation. So with savings, for some people who want to invest, getting gold is the ideal way. Now, the benefit of the LBMA. So one of the things we'd like to see the government do for us in Nigeria is Standard Organization has adopted the ISO standard for gold refining, but our refinery is not LBMA. And what LBMA does, and it takes a while for you to get those statuses, what LBMA does, it makes your gold be viewed as a financial instrument. Those kind of certificates, those are the kind of gold products that central banks buy, the JP Morgans, the bullion banks. So now that we are also swapping our gold for LBMA products, if you buy those gold coins, half an ounce, even 1 gram bar, and it's LBMA certified, it's as good as AFEX if you take it abroad and you have your certificate. So on one hand, gold in general is good for inflation, but LBMA certified gold also has that added benefit as a financial instrument.
Because I've seen analysts, raise concern about what Zimbabwe is doing now, saying that, okay, fine, it's a gold coin, but you cannot spend it, abroad, and you would have to get a full coin to be able to enjoy the benefits. And most of these people don't make as much as $1,800.
Well, you see, the difference with Zimbabwe, you have to remember, Zimbabwe has been through this before, so they don't want to get here again. They remember when they were taking wheelbarrows with their money, and they had to swap and start using the US dollar. And Zimbabwe is well established. They have Fidelity printers. They've had a good refinery, very integrated with their central bank. So the good thing about what Zimbabwe is doing, because the central bank is involved, the whole system, they have actually made their coin a legal tender. So literally in Zimbabwe, you could take that coin and go pay for a house and go do those things.
And that's a full ounce.
It's a full ounce. Well, it's a little, in their coin, I wish I could show you the specs.
Right.
It's a little over an ounce. It's about 33 grams. An ounce is about 31.1 gram. However, their coin is not pure gold. It's very good. It's about 92%. Notwithstanding, if the government of Zimbabwe, if the central bank is selling this and the banks are selling this and they've made a legal tender, look, 92% gold, you don't really need the world to accept it if the country and the bank and the banks, the central bank has said this is also legal tender. Now, they've also done some partnerships with, I want to be careful here. I know they've done some partnerships with international retailers where even their coins are being sold on the international market.
Now you spend it abroad.
Well, I don't know if it can be spent abroad, but you can acquire it abroad. Okay. Now, the spending abroad, like we've just said, gold is gold. I can sell, like even this coin, although our coin doesn't have the LBMA certification, it's gold. We can sell it. You'll get the value for your gold. But you don't have that premium. You can't view it as an instrument.
Right.
So either way, what Zimbabwe has done is excellent for the country. It's saving the economy. They do not want to go back to where they were 20 years ago. And it's brilliant. And even the Bank of Ghana is doing something different, Central Bank of Ghana. They are doing a government gold buying program where the central bank has been buying gold in this case, for their reserves. So you see, the strategy is very different here. Ghana is buying gold for their reserves,
right,
saving their reserves. But what Zimbabwe is doing is all the way, gold to the people, similar to what our app is doing, but also buying gold as well for their reserves.
And tell me about that app. It's called
SANU.
SANU.
So yeah. SANU is a digital platform that allows you buy gold and silver. The beauty of this is you can buy gold in a small unit as 100 naira.
Fractions.
Exactly. That's really been the power. You find a lot of people, especially women, we've encountered in our markets, gold markets up north in Kano, saying we want to buy gold 1 gram, but even that 1 gram, it takes a lot to get money for 1 gram. But by the time you have your money...
And you don't have to hold the physical...
That's my point. So by the time you have your money, the prices keep increasing. So this way, the digital platform allows you buy gold at any price in fractions until you can get. So what we do is when you now have enough, should we say, representation, digital gold, but all back to one-to-one in the vault, you can go redeem it physically. So you go to a Union Bank, select Union Bank branch, and redeem it for the product that you select on the app as well.
Because we're having FX issues, you know, in the country right now. Everybody's looking for dollars, you know, at this point. How does this help?
Well,
the app.
We think the way this helps, it helps 2 ways. One way is a lot of times people are running to the dollars just because, not because they even need it, and this is what the central bank doesn't like. The central bank would rather make the FX available for manufacturers and those that need it for importation. But a lot of people are running to the FX just as to hedge, to protect their investments or their funds or save. Gold now gives you that option. You can save in gold. And then that way there's less pressure, we think. There should be less pressure on our FX reserves. Also, for those who may need FX, say you have school fees, medical bills abroad, if you get an LBMA certified product and you go to London, you just go to London and you get your FX as well.
Quite interesting. Yeah. It seems that we're going back to gold, you know,
well,
in these times.
Back to gold.
But
digital, but modern times. So what we're doing now is where it's never happened that you're allowed to use a local currency, Naira, and you can get these financial instruments that you know, I mean, that you see in the West. So what we're doing now is, but we feel like we've brought technology and convenience with traditional, old school. I guess people think gold is old school, but at the same time, our currency, our fiat. So what we're doing now really is you're giving gold back to the people. People want gold for many reasons. If you need gold to save, some people tell they want gold for dowry, for so many reasons. But a lot of times they can't get access to the gold. So people keep saying, this gold that you say, we keep hearing about gold, illegal miners, mining gold. You say you're refining gold. Where is the gold? So now, gold to the people through SANU.
Through SANU. So if I want to get the app, it's available on...
So it's available on the Apple App Store, on Google Play, starting tomorrow, July 28th. It's live for everyone to go ahead.
So it's spelled SANU as in...
Almost like SANU in Hausa, but SANU means gold in Bambara, in Mali.
Like an S-A-N-U,
SANU.
SANU.
Yes.
Interesting. So how does the app play into the value chain of the gold industry?
Very good. So what the app does for now is it's now, you see at the back of it, so Kian Smith at the back, we're in the whole value chain. We are actually buying gold from the artisanal miners, and this is the same Nigerian gold that we're now swapping for the gold that we're now turning around to sell back to Nigeria. So at the back, this is what it's doing. Eventually, it will do more. We don't want to talk about that. But right now, you can see how it plays in the value chain. The gold that is coming from Nigeria is going back now all over to the people. So this is what the miners, this is a gift from the miners back to the country.
Right. So if it doesn't matter how many people, buy, gold on the app, there will always be gold.
Good. There will always be gold one-to-one backing. Now, let's be honest. Is all of Nigeria's gold that we're producing right now sufficient for the huge demand that could come from Nigeria? Because we believe that Nigeria has a huge market. And right now, Nigerians are known in Dubai, in Mumbai, in London, in Switzerland, in Italy, for the amount of gold they buy, but we don't have that data. So SANU is also going to give the government and the financial institutions and data collectors the data. How much gold really can Nigerians buy, or are Nigerians buying? So that's going to be there. However, back to what we were saying with volume, we are definitely using all Nigeria's gold to back, but a lot more gold. So we're also working with other partners. There's the Stonex Group, the Fortune 50 company between number 2 and number 4 for gold trading in the world. They are a partner of ours, and we're also partnering with the Dubai refinery as well. So beyond Nigeria's gold, all our gold is there, but if Nigeria should blow up, we already have the volumes.
We already have the volume
secured, yes.
So at this point now, you know, everyone is talking about hedging, you know, against inflation, you know, running away from the equities market, risk off at this time. But, you know, I feel gold should be shining, you know, at this time.
Gold is shining.
It's down. It's at 1,718 from 2,000 dollars in March.
Well, you have to also see the. Remember, look at what's happening with the dollar. As the dollar is strengthening, right? And you know, you're looking at the dollar strengthening. You're looking at what the Federal Reserve is doing with interest rates. It affects gold. So now, on one hand, you look at the price of gold dropping. If you go check out the reserves and see how much gold JP Morgan Chase and the American government and everyone and the central banks of the world are buying, you will actually realize something doesn't make sense. If the US dollar is strengthening, right, why are the central banks buying more gold, but the price of gold is dropping? So there's a lot of things that actually go on behind the scenes. I want to be very careful because
Wall Street.
Exactly. There you go. I'm not in Wall Street. We mine, we produce gold, we understand some about gold, but we don't really want to. I don't want to enter a discussion about what happens in pricing,
right,
and all those things.
Right.
But however, gold is shining, and we actually think that the timing is right. Now that prices are low, go do your research and look at what's going on. What are the central banks of the world doing? What is Ghana doing? What is Zimbabwe doing? Why are they doing this? But gold prices are going low. This is the time to buy gold. So we'll leave it for the financial advisors, because we're not
exactly. So looking at, you know, Nigeria now, what should the central bank be doing, you know, at this point with gold? To give credit to the central bank has actually been involved the last 2-3 years very cautiously in working with gold programs with the government. Cautiously, they've had to balance between their short-term concerns, medium-term and long-term goal. But we know the central bank is working on gold, so we'll tell you what they're doing. The central bank is looking at gold. They're just looking at the best option for the direction to go. So, but we look forward to the central bank, maybe we say, taking quicker action. Right.
But the central bank is actually looking at gold.
And you know, with the war in Ukraine, that has actually, you know, impacted the gold market.
Yes,
how have you seen that?
Well, so what that has done, the war in Ukraine, I mean, for gold in particular, commodities in general.
Right.
So Russia, what it really did for Russia is, so you can see how Russia, they were actually one of the biggest gold producers. And then all the LBME refineries, I forget how many, were stripped of that LBME status. And you already see the reason why the Russian currency didn't collapse is actually strengthened, one of the best performing currencies right now, because they backed their currency with gold.
And they're trying to bring it down at this point.
Very good. It was too strong, but they backed it with gold.
Right.
So you could already see the signs of gold coming into play if we've been missing it. Russia backs their currency with gold. Zimbabwe now is releasing a gold coin. Ghana buying gold for the central bank. Gold is really, it's moving.
It's moving.
Yes.
And I would like to also be backed, or, you know, back some of my investment with gold. And so if I just get that app now, I could just hold gold on the app.
Well, so to let people know very clearly, buying gold on our app, you're buying physical gold. Whether you collect it or not, you're buying physical gold because it's backed. It exists. It's sitting there in the vault. And you can tell because whenever you say, I want to pick it up, you can go redeem it.
Physical gold.
Exactly.
Very interesting.
Yes.
Well, I'll be looking forward to that, the launch of the app, and, you know, try and hold some gold in there and get some backing, you know, for my assets. Thank you so much.
Thank you.
For coming on the program, narrated by MD Keon Smith, Refinery. It was great having you.
Thank you.
All right, after the break, our commodities market update is next. Do stay with us. This is Business Morning. All right, now for AFEX Commodities update, let's get a sense of activities on the exchange for the week ended July 25th. We have Grace Abikoye, now strategy and corporate finance analyst at AFEX, join us with the details. Great to have you.
Hi, lad. It's a pleasure to be here again.
Yes, yes, give us a rundown of market activities on the exchange.
Okay, so we saw quite a number of changes across the commodity market this week. For the total turnover, there was 3.07 times increase, 3.07 times increase of the previous value, closing total turnover at 1.29 billion naira. And for number of volumes traded, it increased by 2.19 times its previous value, closing at 3.8 million contracts, and the number of deals declined significantly by 47.39%, closing at 242 deals. For the AFEX Commodity Index, which is the ACI, there was a slight increase of 2.10%, closing at 472.01. The AFEX Export Index retained its value of 194.84. So now a deep dive into the volume of contracts traded across the exchange. We saw that maize, sorghum, and soybean accounted for bulk of the trades. Soybean increased to 500,339 from 121,944 contracts. Sorghum contracts increased to 1.9 million from 4,434, which is quite significant, really great change. Cocoa increased to 1,837 from 158. Ginger increased to 99,000. Sesame increased to 90,000. Cashew increased to 653 from 66 contracts. And opposing this change is maize and paddy rice, as the contracts traded declined. For maize, it closed at 980,410 from 982,535. Paddy rice declined significantly to 75,096 from 650,175. So now we'll move on to the price performance of the commodities across the exchange. Maize increased by 0.73% at a value of 1 naira 67 kobo, closing at 228 naira. Paddy rice increased by 14.33% at a value of 35 naira 50 kobo, closing at 283 naira. Soybean increased by 1.47% at a value of 6 naira, closing at 413 naira. Sorghum, which is the top gainer for the week, increased by 28.86%, closing at 61 naira 92 kobo. At a value of 61 naira 92 kobo, closing at 276 naira. Cashew nuts increased by 11.84% at a value of 73 naira 4 kobo, closing at 689 naira. Ginger declined by 14.16%, closing at a value of 168 naira 37 kobo, closing at 1,020 naira. Sesame also declined by 0.89% at a value of 6 naira 83 kobo, closing at 760 naira. The value of cocoa remained the same at a value of 1,198 naira. And Lade, this is just a summary of all that has happened in the commodities markets this week. And for more information, kindly visit our website, africaexchange.com, or you can follow our social media handles, AFEX Nigeria and ComEx by AFEX.
All right, Grace, thanks for that update. Quite a big move there by Sorghum. Thanks for giving us all the info there on what happened on the exchange. Thank you so much. All right, now let's take the conversation further. Code Cash Crop, an industry platform initiative which harnesses the interaction of three key sectors that normally interact. That's talking about agriculture, finance, and technology, used to unlock innovative solutions to Africa's food challenges. To have this conversation now, we have Yusuf Oguntola, Chief Technology Officer at AFEX, join us via Zoom. Great to have you.
Thank you for having me. Good morning.
Yeah, good morning. So give us a bit of background into this code cash crop. How did you conceive the idea?
So Code Cash Crop is an FX's initiative, and what we intend to do with it is to spur conversation between three key sectors which seldom interact: the agricultural sector, the finance sector, and the technological sector. Now, what we intend to do is to spur interactions, conversations, innovations, and ideas from within these three key sectors when they interact. So we are able to then invent solutions that would help us fix the food security challenges that we've been having in Africa as a continent.
And given the current challenges of Africa's food system, what solutions will this integration of technology, finance, and agriculture bring to the table to resuscitate the sector?
All right. So if you look at the agricultural trade infrastructure that we have in Africa today, now there is definitely going to be production happening in one part of the continent, and there would be consumption requirements from other parts of the continent. We drink a lot of coffee in Nigeria as of today, and we are not even in the first 5 countries that grow coffee on the continent. So it means that coffee has to move from where it's being produced to we need to consume it. This is also same for several other commodities across the value chain. Now, for this to happen effectively, it means that we need to improve on our infrastructure. So we have to trade, we have to buy, we have to sell, either physically moving the product from where it's being produced to where it needs to be consumed, or digitally trading this commodity via several exchanges around the globe. So for this to happen, we need infrastructures to be in place. One of the best ways to put in infrastructure that would help immediately resuscitate all of these issues is to bring in technology to help solve it. If you look at Asia as an example, they now have what we call the smart ports that has made them one of the best ports when it comes to moving goods around in that area. So we need technology. Now, for technology to then come into play, we need money to invest into this sector to be able to implement the technology, to deploy it and make sure it works effectively. So it means technology has to come. It means finance has to come into play to bring in the money that technology needs to be deployed with. And then what we are moving around is agriculture. So this is where these three key sectors came into be. And AFEX as an organization then looked at it and say, this is what we need to do. These three key sectors are not having this conversation. We need to create a platform where the conversation is going to be happening. That's what led to Code Cash Crop.
Quite interesting. And you're having the 3rd edition, of this Code Cash Crop. You've organized a AG hackathon. How does this work, and why is it important, and what can we expect from the event?
Yeah, so what we did with the hackathon, by the way, the 3rd edition of the Code Cash Crop is happening this Saturday at the Lagos Oriental Hotel in Lagos. So what we did with this is to ask everybody within these three key sectors to come and submit ideas, innovative ideas and solutions as to how they believe we can better improve the agricultural trade infrastructure in Africa. We've had several submissions, about 120 of that. We've then gone ahead to pick 6 best of these innovations, which we would be unveiling on Saturday. Would have all of these 6 people then pitch their ideas. Some of them are just starting, some of them are already in the MVP stage. They'll pitch the idea to judges, and then at the end of the day, the judges would pick which solutions are the best that we should then be looking at and supporting the implementation. We'll also be having several conversations. Panelists are already on their way coming on Saturday. They will be having conversations around how do we use technology to improve agricultural trade infrastructure in Africa. So we'll have both the hackathon challenges, and then we'll have several panel sessions on Saturday in Lagos Oriental Hotel.
Sounds like it's going to be a very interesting one. Where can we get all the information, on the Code Cash Crop, and is the event open to the public?
Fantastic, correct. So the event is open to every everybody. It is publicly open. People can go on our website, africaexchange.com/CCC, or simply just go to africaexchange.com. You see code cash crop, register to attend the event, and just book a seat that you are going to be attending. It's completely free of charge to attend, and it's open to everybody in the public domain.
And that would include me, I'm guessing.
Absolutely. All right. I'm expecting to see you there.
All right. Thank you so much, Yusuf Oguntala, Chief Technology Officer at AFEX. It was great having you. All right, we'll take a moment now.
Thank you for having me.
All right, we'll take a moment now. All right, now let's take a look at what's happened in the markets. We have Ini there with the details. Ini, the equities market down again yesterday.
Down again, in fact, very, very down.
Big move down.
Very, 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 almost 2%. I mean, we hardly see this kind of fall in the equities market, but yesterday it was down 1.86. We still have the equity still managing around that 27 trillion naira. We hope it doesn't lose it, because as we would see here, it's all red in the activities, and it's not looking so good at this time. We do hope that there'll be a change.
And it was all thanks to MTN again.
Yes.
Big sell-offs with that stock.
You know, when someone is strong or when something is strong, you always expect it to direct, the direct sentiment, and that's what is happening.
Yeah, we see most of those investors actually taking, profit at this time ferociously, on that stock.
Yes, and we're hoping another group of investors will take advantage of the dip and we'll see some bargain hunting. I wonder how, because this fall is really, really high, you see, and we've seen that the All-Share Index has dropped to 50,000 now. We hope we don't lose that 50,000 level.
Yeah, my eyes. I'm watching that 50K level, to see if it breaks, at this point. It'll be very interesting to see.
Very, very. So month to date and year to date returns printed minus 2.7% and 18.1%. That's for the adding, and total trade increased value. And then looking at the sectoral performance, that's what we have here. Broadly negative, as we can see. Banking down, insurance down, oil and gas down, everything down, and of course we expect the market pref to be negative with that. There were 35 tickets that lost and only 3 gained. International Breweries lost and drove that almost 10% yesterday. Top trades yesterday were flour mill, so there you go. These were the victims of yesterday's fall. Flour mill, Transco, and GTCO. The banking sector will always find a way to be represented there. In the unlisted market, we see that it's positive there, 1.16%. And then market cap is at still hovering around the 1 trillion naira for the market cap at the NASD OTC markets. 13 deals yesterday, volume 159,000, value 15.8 million naira. We go to the fixed income market now. The bonds. Yesterday, FAC was released, and we do know that this market really reacts to FAC, but there's always, the time lag. So we don't know when it's to stream into the fixed income market. Perhaps we'll see some activities. We're hoping that the raising or the hiking of the MPR would attract more, but it hasn't done so much because of the squeeze on liquidity. But so we're hoping that with the FAC that was released yesterday, that perhaps it will find its way here. But for the FGN bonds yesterday, this was the only market that traded 2 days ago. Yesterday they had 17 deals worth 7.19 billion naira, and we can see there that the March 2027 securities was the most favored. In OMO, only 4 deals yesterday, 8.68 million naira. And CBN bills had only 2 deals, 750 million naira. And I guess that's all that we have, Ladi. Ladi, I know we're talking about FAC that was released yesterday.
Yeah, that number.
Yes, remember we're talking about the amount, just about 800 plus billion naira.
Quite small.
Yeah, for the 3 arms of government. So this reality that the country is going really broke seems to be glaring now.
Revenue issues at this point.
Exactly, and so if the 3 tiers of government are sharing about 800 billion naira, then how much do you expect to stream into like the fixed income markets where investors or traders are expecting that it will make a move in the market?
Right, but there's so much to unpack there, with these markets, and quite a tough time. No market is looking
except
safe.
the gold. You were talking about gold earlier.
Well, gold, yeah.
Maybe the gold.
Gold not doing too badly, but it has, fallen from that high of about $2,000. But I think you have Choma there with some of those.
Okay, Choma, do we have Choma now? Choma, good morning.
Good morning. Thank you for having me. Good morning.
Good to have you, Choma. I've been waiting for you. So we saw that FAC was released yesterday, but we know there's always a time lag before it streams into the market. But what are your expectations, especially when you look at the figure of the amount that was released for FAC?
Yes, we expect that it will help with the liquidity in the system. Over 800 billion was approved, and a percentage of it flows into the system. So we expect about 430 to come into the system. The money market is currently short, tight. As a result of that, we've seen rates trade at about 15%. Like you said, with this fact coming in, it will help with the liquidity in the system, and we might see more activities in the fixed income market.
And then the hike in the MPR, has that made any difference so far? We know the yield has gone from 14% to 15%.
Yes, it has helped the yield in the money market, and we've seen that also flow into the fixed income market. We've seen the short end of the yield curve trading at about 11%. Well, this is basically because of liquidity, the tight liquidity we've seen in the system. So we've seen people discount their bills to try and generate liquidity for themselves. So overall, at the short end of the T-bill curve, we've seen rates trade at the short end of the T-bill curve at 11%. Then the mid end is at 9%. That's the belly of the curve. And then the long end of the T-bill curve still remains at 7.5. But most of the activities we see are a discounting of the special deal from CBN.
Right, so from experience now, how long does it take for the FAC to stream into the market? How long do we wait for, do you think?
Well, we expect that the FAC will come before the end of the week. Yeah, we expect it to come before the end of the week, yes.
All right, we'll be looking out for that and keeping our fingers crossed for that, Choma. Thank you so much for joining us this morning.
Thank you for having me.
All right, Ladi, so that's it.
All right, so we'll be waiting for that to hit, and we'll see the impact.
Yeah, but
I
do wish that we don't have to be waiting for FAC, before something happens in the market.
Yeah, exactly, and let's hope we don't see more sell-offs, in the equities market today. Looks like maybe we can see
slim, I guess.
Yeah, but it seems like it's going to be a bearish week the way it's looking. All right, Nate, thank you so much.
Thank you for having me.
All right, after the break, we'll take a trip to London. That's the moment to stay with us. This is Business Morning. All right, now let's head to London. We have Juliana there. Well, we've seen gloomy data this morning. According to new figures, shop price inflation rose to 4.4% in July, up from about 3.1% in June, highest since 2005. How are you seeing this, Juliana? All right, seems I can't get your audio. Juliana will try and get Juliana back on. I don't know if we have her audio now. Juliana, can you hear me? Juliana?
Sorry, I've got about three people in my ear, Laddie.
Fantastic. I can hear you now.
I can hear you.
Yes,
you hear
can
me?
Carry on. I can hear you now. You can carry on. Yes,
okay,
keep talking, please.
Let's keep talking. I was just explaining, as you know, Laddie, it is the time where children are off school, which is a difficult time for parents, particularly those who are struggling to feed their families anyway, because, of course, they're not getting a lunch at school. You have to feed them. So shop prices is a really significant indicator to how this cost of living crisis that we've been speaking about for months on months is affecting people. There have been schemes, I believe, the Big four grocers here in the UK, so that's Asda, Sainsbury's, Tesco and Morrison's. They have pledged to try and keep prices down, but of course they're also dealing with rising energy costs, fuel, to get these HGV drivers to get the food into the shops anyway, and I think this has all been reflected in the data that was released this morning. Hope you heard that loud and clear.
So I did, loud and clear, but you know, all eyes, you know, on the Fed today. How are investors in the UK bracing for the Fed decision today?
Well, no surprises, they're certainly fretting. However, the FTSE All-Share is in positive territory at this stage. I think all economists around the world are expecting the world's largest economy to raise interest hikes yet again by about 0.75%, which would be identical to the rate hike that we had this time last month. But of course, there are concerns. It is tricky, and it's a delicate balancing act that central bank governors across the world are trying to tread over the coming months, because of course you raise interest rates, it makes the cost of borrowing more expensive. So that has a knock-on effect. If you're paying your mortgage, you're paying your car bill, you will start seeing that tick up. And it's supposed to then stop the demand and start abating inflation, but it can have the reverse effect. And there are concerns that there could be a risk for recession. But we'll all wait and see what Jerome Powell and the rest of the US Federal Reserve have to say. But yes, we're all keeping our eyes and ears peeled to what's happening stateside later this afternoon.
And I'm sure traders will be waiting, you know, patiently to see their next move in most of these markets. All right, Juliana, thank you so much.
Thank you.
All right, now let's take a look at what's happening in other markets. Talking about the crypto space there, we see the Fear Greed Index this morning, 28 points, shifting lower from the 30-point range. We've been at its 28 points this morning of 100, showing it's still extreme fear in the crypto space. Market cap, $977.43 billion, and it's up by 1.01%. And we see volume traded, that's Bitcoin and the altcoins, that's $61.96 billion this morning. See that Fear Greed Index there, 28 points. And we see a price of Bitcoin this morning, $21,199. It's down about 0.25%. We see Bitcoin there struggling this morning, trying to see if the bears can push it below 20,000. The bears are pushing hard, but we see the bulls defending that 21,000 point range at this point. And you see volume traded, $26.10 billion there. And we see Bitcoin settled below the 22,000 support zone. It consolidated near the 21,000 zone for some time before more losses actually entered. The price declined below the 21,000 level, but downsides seem limited. You know, at this point, it's now trading below the 21,500 level and the 100 hourly simple moving average. Let's look at Ethereum there, $1,447. Down 0.32%. Volume traded, $16.99 billion. Ethereum there lose that 1,500 mark at this point, and it might get to 1.3 if the sell-offs actually continue. All eyes on the Fed today, and crypto traders will be watching for what the Fed decision is going to be. All right, now let's bring in Gilbert Jokpata now, digital market analyst. Hello, Gilbert.
Yeah, good morning, Mr. Lati.
Good morning, Gilbert. Great to have you. So a new crypto tax bill is being proposed in the U.S. to exempt transactions under $50 from capital gains tax. How's the crypto community responding to this?
Okay, one of the major hurdles to Bitcoin not just being a store of value, but a medium of exchange has been the U.S. tax code. You know, in the U.S., if I walk into a store, buy a cup of coffee, and I walk away from that coffee, first of all, I'll have to pay for my coffee. Once I walk away, I will still have to pay for capital gains tax. So this new crypto tax bill by the Republican Senator Pat Toomey and the Democratic Senator Sinema seeks to allow consumers to pay for goods and services without having to worry about capital gains tax, to encourage public adoption of cryptocurrency. If you're paying for something that is below $50. So in a statement by Tommy, he's worried that the present tax code is standing in the way of the ordinary citizens using Bitcoin in their daily lives. This is actually a signal that the U.S. Congress is paying attention to the industry, and I personally would like to see how far this deal will go, because this is actually encouraging for the cryptocurrency industry and community. So we will push the boundary from just using Bitcoin as a store of value, but also as a medium of exchange. However, I'm not quite excited about this bill. While I believe the bill is applaudable, I still believe that $50 is low in an inflationary environment. It will be more exciting if...
What do you think the ideal number would be?
About, at least $1,000 is fair enough.
$1,000. Okay, well, that's a lot of money, Gilbert, at this point. But they're starting somewhere. They're starting with 50. Maybe they will take it up a notch, at some point. All right, so all eyes, on the Fed today. Bitcoin price looking quite, shaky. What are you expecting?
A whole lot depends on the statement that's going to come from the Fed. If the increase is not quite exponential, we may just have a little reaction, because I actually expect that the interest rate will be high. So if we have at least 70, 75, I don't think that the market volatility will be much, but if it's above that, we will see more volatility. But a whole lot from market price have to depend on what the Fed chairman is going to say today and the dollar spread.
And obviously, we know the equities market, too, is going to react, to whatever the decision is. And when do you see the decoupling, happening? Because we've seen, Bitcoin actually correlated to the NASDAQ, and that seems to be holding strong, at this point. When do you think we can expect to see a decoupling?
One major thing why this correlation exists is that people who have interest in tech stock, which you look at the NASDAQ and S&P, are still people who have interest for cryptocurrency, because you need to be a lover of technology in the stock market. If you're a lover of technology in the stock market, you will also be a lover of cryptocurrency. So you just happen to see that it is the same persons who are holding this tech stock that are still holding large parts in the cryptocurrency market. The more we can push the more of a store of value mindset into the market, and more people rather use Bitcoin more as a store of value than just seeing it as an asset or a security, then we are going to see that decoupling happen as soon as that mindset change happens.
All right, and most pro traders, they always talk about, in bear markets, there are always, opportunities. What opportunities are you seeing in the crypto market at this point?
More from a trader's perspective, I know the mainstream idea of bottoming, or like a couple of weeks ago, there was more of a bullish continuation. But if you look at that structure, the market structure has certain downside, and this downside depends a whole lot on the dollar and interest rate. So I think the safest things traders will be doing at the moment is shorting the market, while for investors, we still have pretty discounted prices for in the cryptocurrency market they can still take advantage of.
And recently we saw, Matic, was going on some kind of rally. What altcoins are standing out for you at this time?
Personally, exchange token, BNB. Presently, I have been looking at PCF token. It's doing well. We also have Ether. Ether is doing well. Solana and the rest. These altcoins are really, despite what is happening in the market. If you look at the Ethereum structure is doing very well, even though we are in the bear market. And this is actually telling us structure and momentum is actually a good thing for the bull market. It means that when the bull market comes, these assets that are holding a very good and solid structures are only building a good base for more to gather good momentum for an uptrend once the bulls are back to the market.
And we know, most traders love the big cap coins, because they're considered quite, safe and, less risky. But what micro caps are looking good at this time? Because, in the bear market, we see most of these projects actually go underwater.
Okay, if we are looking at large market cap assets, then we are looking at Ether, because, okay, Bitcoin, first of all, is an asset that if you look at, is still looking good. We also have Ether. Ether is quite something amazing. Like, I'm surprised Ethereum is able to still maintain the structure. I was actually expecting a more decline market structure-wise, but Ethereum is holding strong in a certain range. We also have D&D. D&D also looks very, very, is sitting in a solid structure. It still has its potential downside, no doubt, but the potential downside still sits in a solid structure as well. Exchange token are doing the same thing. FTT, which is the native token as well for FTX, doing the same thing. BTC tokens, Solana. These are assets that, despite what is happening and potential downside, still the threat is still imposed. But the next structure they are to hold looks very, very solid, regardless of what is happening. And I think these are the safest assets if somebody is looking at that. They should pay attention or do their research into these assets, because smaller market cap currencies, their downside risk will still be exponential if Bitcoin dips further.
All right. Talk about trying to be safe in the risky market. Thank you so much, Gilbert Jokpata, financial market analyst. It's great having you.
Pleasure.
All right. All right,
Thanks
so that's the crypto market. We're seeing that's mostly quite mixed, at this time with volatility in that market. All eyes on the Fed to see what the decision will be, and we know the markets are going to react. All right, that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And remember, you can watch this again on our YouTube page. Just search for Channels Television on YouTube, check videos, and don't forget to subscribe. Thank you for watching. I'm Ladi Williams. Bye for now.